Hi, if you're counting on Social Security for your retirement, what I'm about to share with you could change everything you thought you knew about your financial future. The Social Security system is facing a crisis in 2026 that nobody is talking about enough. And if you don't understand what's happening right now, you could be blindsided by changes that directly impact your benefits. Before you panic or assume this doesn't affect you, stay with me because I'm going to give you the facts, the timeline, and most importantly, what you can do to protect yourself. Whether you're already receiving benefits or planning to retire in the next few years, the next 10 minutes could be the most important information you hear all year. Welcome back to the channel where I break down complex financial topics into information you can actually use. I'm here to help you navigate the confusing world of Social Security, retirement planning, and financial security in your later years. If this is your first time here, make sure you subscribe and turn on notifications because I'm constantly updating you on changes that could affect your benefits and your financial well-being. These videos take extensive research to put together, and your support through likes and shares helps me reach more people who desperately need this information. Now, let's dive into what's really happening with Social Security in 2026 and why you need to pay attention right now. The Social Security crisis of 2026 isn't something that suddenly appeared overnight. This has been building for decades, but we're now at a critical point where the consequences are becoming impossible to ignore. To understand what's happening, you need to know how Social Security actually works. Many people think that the Social Security taxes they paid during their working years went into a personal account with their name on it, waiting for them when they retire. That's not how it works at all. Social Security operates on a pay as you go system, which means the taxes collected from current workers are immediately used to pay benefits to current retirees. It's essentially a transfer system from the working generation to the retired generation. This system worked beautifully for many decades when there were many more workers than retirees. In the 1950s, there were about 16 workers paying into the system for every one person receiving benefits. That ratio has been steadily declining as people live longer and birth rates have decreased. Today, there are fewer than 3 workers for every beneficiary, and that ratio continues to shrink. This demographic shift is the core of the Social Security crisis. We have more people taking money out of the system and fewer people putting money in. Eventually, the math simply doesn't work anymore. The Social Security system does have trust funds that were built up over the years when more money was coming in than going out. These trust funds have been earning interest and acting as a buffer. But here's the critical issue. The Social Security trustees, who are responsible for monitoring the financial health of the system, release an annual report projecting when these trust funds will be depleted. According to the most recent projections, the Old Age and Survivors Insurance Trust Fund, which pays retirement and survivor benefits, is projected to be depleted by 2033. That might seem like it gives us some time, but 2026 is significant because it represents a tipping point where the warning signs become impossible to ignore and political pressure to act intensifies dramatically. When we talk about trust fund depletion, it's crucial to understand what that actually means. It does not mean Social Security will completely disappear or that benefits will drop to zero. Even if the trust funds are fully depleted, Social Security will still collect payroll taxes from current workers. Those taxes would be enough to pay approximately 77 to 80% of scheduled benefits. So if you're supposed to receive $2,000 per month, you might instead receive around $1,500 to $1,600. That's still a significant cut that would be devastating for millions of Americans who rely heavily or entirely on Social Security for their income. The reason 2026 is getting special attention is because it's an election year, and it's also when many expect serious legislative proposals to address the Social Security shortfall. Politicians have been kicking this can down the road for years because the solutions are politically painful. There are really only a few ways to fix Social Security's funding problem. You can increase revenue by raising payroll taxes, raising or eliminating the cap on earnings subject to Social Security tax, or finding other sources of funding. You can decrease benefits by raising the retirement age, reducing cost of living adjustments, means testing benefits so higher earners get less, or changing the formula for calculating benefits. Or you can do some combination of these approaches. None of these options are popular, which is why Congress has been so reluctant to act. Let me break down what each of these potential solutions could mean for you personally. If payroll taxes are increased, workers would see more money taken out of their paychecks. Currently, employees pay 6.2% of their wages up to a certain cap, and employers match that amount. Raising this percentage even by 1 or 2 points would generate significant revenue for Social Security, but would also reduce take home pay for every working American. Another option is raising or eliminating the cap on taxable earnings. Right now, only earnings up to a certain amount, which is adjusted annually and is around $160,000 for 2024, are subject to Social Security tax. If you earn more than that, you don't pay Social Security tax on the excess. Raising or eliminating this cap would primarily affect higher earners, but could generate substantial revenue. On the benefit side, raising the full retirement age is often discussed. The full retirement age has already been gradually increased from 65 to 67 for people born in 1960 or later. Further increases to age 68, 69, or even 70 have been proposed. This effectively cuts benefits because people would have to work longer to receive their full benefit amount or accept even larger reductions if they retire early. Changing the cost of living adjustment formula is another possibility. Currently, Social Security benefits are adjusted annually based on inflation as measured by the Consumer Price Index. Some proposals suggest using a different measure that typically shows lower inflation, which would mean smaller annual increases in benefits over time. This might sound minor, but over 20 or 30 years of retirement, it would result in significantly lower purchasing power. Means testing is particularly controversial. This would involve reducing or eliminating benefits for people with higher incomes or substantial assets. The argument is that wealthy individuals don't need Social Security and the money should be reserved for those who truly depend on it. The counter-argument is that people paid into the system their entire working lives with the promise of benefits, and changing the deal now is fundamentally unfair. Means testing could also discourage people from saving for retirement if they know their own savings will disqualify them from Social Security benefits. So, what should you be doing right now in light of this crisis? First and foremost, don't panic, but do plan. If you're currently receiving Social Security benefits, understand that any changes are most likely to affect future beneficiaries rather than current ones. Politicians are extremely reluctant to cut benefits for people already receiving them because these are reliable voters who will react strongly to any reduction. However, if you're planning to retire in the next 5 to 10 years, you need to build some uncertainty into your planning. Don't assume you'll receive 100% of your projected benefits for your entire retirement. I strongly recommend creating multiple scenarios in your retirement planning. Calculate what your financial situation would look like if your Social Security benefits were reduced by 10%, 20%, or even more. Do you have enough other sources of income, whether from pensions, retirement accounts, or part-time work, to maintain your desired lifestyle? If your entire retirement plan depends on receiving full Social Security benefits, you're taking a significant risk. Diversifying your income sources is crucial. Max out contributions to retirement accounts like 401k plans or IRAs if you're still working. Consider working a few years longer than you originally planned, which not only gives you more time to save, but also increases your Social Security benefit and reduces the number of years you'll need to draw on your savings. If you're younger and decades away from retirement, the crisis is both more concerning and less immediate. You're more likely to face significant changes to the system, but you also have more time to adapt. The absolute worst thing you can do is assume Social Security won't exist at all and ignore it in your planning. Even in the worst case scenarios being discussed, Social Security will still provide meaningful benefits. But you should assume those benefits will be less generous than what current retirees receive. Plan to be more self reliant in retirement, save more aggressively, and don't count on Social Security to be your primary income source. Pay attention to the political process in 2026 and beyond. Contact your representatives in Congress and make your voice heard about how Social Security reform should be handled. This is not a partisan issue. It affects Americans of all political affiliations. The decisions made in the next few years will have profound impacts on retirement security for generations. Get informed, stay engaged, and participate in the democratic process. Your future benefits may literally depend on the choices lawmakers make right now. One more critical point. Be extremely wary of anyone claiming they can guarantee your Social Security benefits or offering special programs to protect your benefits from cuts. These are almost always scams. The only entity that controls Social Security is the federal government, and no private company or individual can shield you from systemic changes to the program. Stay informed through official sources like the Social Security Administration website and trusted news outlets, not through unsolicited phone calls or emails. Thank you so much for watching this crucial update on the Social Security crisis facing us in 2026. I know this isn't the most cheerful topic, but understanding what's happening is the first step to protecting yourself and your financial future. If you found this video informative, please hit that like button and share it with friends and family who need to understand these issues. Leave a comment below telling me your biggest concern about Social Security or questions you have about retirement planning. I read every comment, and your feedback helps me create content that addresses your real concerns. Make sure you're subscribed with notifications turned on because I'll be bringing you updates as this situation develops and as proposals move through Congress. Your retirement security is too important to leave to chance, so stay informed and stay prepared. I'll see you in the next video.